someone is actually looking out for you. You don't have to worry. You find the right professionals. It's going to be easy peasy. You deserve it as a vet, as a reservist. You deserve it. Do it.
First of all, I'm a realtor, but I'm actually a military spouse with a person who served for 30 years.
Yay!
Thank you.
A real estate agent. I'm so honored to work with these people who have sacrificed for us or have been willing to sacrifice for us.
The VA loan is an excellent financing vehicle, but if you don't have the right team of professionals around you that can help you navigate the space, you can get lost very quickly.
It's a good loan. It's 100% financing, no PMI, really good benefits. I believe I need to marry better.
Hi there, my name's Sharon Heyman. I'm with TTR Sotheby's International Realty. We sell real estate all around the world. But welcome to the Tuesday Morning Mastermind, a group of ladies who are active and powerful in the real estate industry, and every week we take a topic and share information with the general public, because you'll find it useful if you're going to be buying a home or selling a home and you just don't know the nuances. So we want to share as much information as we can. And I have 4 other colleagues that are here today, and they'll introduce themselves.
Hi, I'm Deborah Kitchens, and I'm on the Shepherd Homes group with Sampson Properties. And I too am on the Tuesday Morning Mastermind. And one of the great things about being on the Tuesday Morning Mastermind is we have people here, other ladies with their own business, who have years of experience, and we've been learning from each other and being very helpful to grow our business.
Hi, I'm Bonnie Vinter with Sampson Properties at Shepherd Homes Group. Welcome to the Tuesday Morning Mastermind. We're a group of women in the Washington metropolitan area serving DC, Maryland, and Virginia. We get together each week to go over topics that are important to our businesses and also to you as consumers and real estate purchasers. So welcome.
Hello, my name is Erica Bruden-Delaney, and welcome to Tuesday Morning Mastermind. I'm with Sampson Properties, and we are here to give you a little bit of the inside scoop on what goes on in real estate.
My name is Christina Season. I'm the team leader of Season Homes and Associates at Realty One Group. I am so grateful that I am with these beautiful women here, and we're part of the Tuesday Morning Mastermind, where we collaborate, help each other grow, and see what's out there, what's going on in the real estate industry.
So today we're going to do a deep dive into VA loans. These are loans that are issued to members of the military through the Veterans Administration and provide special benefits for those who have served.
So if you serve in the military and you're eligible for these loans, this is great because it's 100% financing, no PMI. So it would be good for people who are moving here. They don't need down payment, but if they have good credit, and you can finance up to 103% of the purchase. Correct?
Is there a limit, Christine?
I don't think there is.
By county.
By county, they said it's by county, but technically there's no limit. But you have to check by county. Mm-hmm. But you can finance up to 4% of closing costs, I believe. So you can roll that over to the sales price, and you'll come up with no money down, which is perfect.
One of the best things, though, is for especially younger buyers, is that it's zero money down. So a lot of times young active duty members, they have families and they don't have money for a down payment. So the VA loan allows you to purchase a home with zero money down, and then you go through the loan process and
they finance their closing costs too.
Mm-hmm.
So it's fantastic,
Can a seller pay some of the closing costs, do you think?
Absolutely.
Absolutely. I've had that happen.
It's amazing.
For my own.
Yeah. So you don't need the 3%. So you can finance up to 104 or 103 or 104%. That, please correct me. But what happens is that if you don't need that, then you can just finance 100% of the loan, and then you can ask the 3% closing cost, 3 to 4% closing cost from the seller, and then you come up with no money down.
It's an amazing way to buy a house.
Yeah.
I think it's so amazing. That'd be
is.
great for first-time home buyers, right?
Yeah.
Yep. And let's talk about eligibility. So, Erica, you and I were talking about this earlier about when you are eligible to get this VA loan.
Well, individuals are eligible to get the VA loan. Obviously, active duty, retired, and also spouses.
Survival spouse.
Survival spouses also can benefit from the VA loan if your partner has passed away during active duty. So it's a great mechanism to help people build their lives by buying a home. Also, a lot of people may not know that the interest rate for VA loans can be somewhat lower than that of a traditional
That
conventional.
makes it really
It's
attractive.
like half a point
Wow.
less.
Oh
Yeah.
my God, that's amazing.
It really is. It's
Do
a
all
wonderful
lenders do
benefit.
VA loans?
Oh, that's a great question,
That is.
which I'm not really sure of the answer.
We're in the
I think
DMV area, so
Yes,
most
most
of them.
here,
Where
most
we are.
definitely.
Okay.
Yeah,
But it's
in
really
our-
important to get a lender who specializes in dealing with veterans. That's really important
Yes.
because you need someone who knows the ins and outs of how everything works. Someone who's knowledgeable can help you sort of navigate the space much better than someone who's, just within the mortgage.
That's right. And when you reach out with us, we have lenders that we work with in the Washington metropolitan area where this is a specialty. It is so critical in the Washington area to have someone who understands VA loans and some of the special details that go along with it. So let's talk about special circumstances where those that have served might not even have to pay real estate taxes. Do you want to talk about that, Deborah?
Sure, be happy to. So veterans who have a disability rating, they actually will be, first of
Exempted.
all, not have to take pay for a funding fee, okay, when they do their mortgage. And then secondly, in certain states and counties, you will not have to pay taxes. You will not have to pay property taxes.
In DMV, I know because I had experience. The clients who have disability, they just need to submit this form
Yes.
in the county, and their taxes will be exempted.
Yes.
Exactly.
So,
Is there
and the
not the
Purple
whole-
Heart,
Yeah.
if you're a Purple Heart awardee, you're not paying taxes.
Yeah, amazing
Quick
benefits.
question.
Yes.
Do you have to be a certain percentage in order to get the...
Yeah, so
100%.
you have to be 10% and above. You will get exempt from. Oh, I'm sorry.
No,
You have
for the
to have
funding
100
fee.
for the funding
100%.
fee to not have to pay the funding
100%.
fee from the VA for the closing, and 10% and above, you don't have to pay the funding fee. But to be exempt from paying
100%.
property taxes, you have to have a 100% disability rating from the Veterans Administration.
Okay, so let's do a quick recap of some of the really specialized benefits that a VA loan is going to give you. One being a reduced interest rate. Two being the ability to fund 100% of your loan plus most of your closing costs. Three being if you have a 10% disability, the funding fee is waived. If you have 100% disability waiving, in our jurisdictions, you will not pay property tax.
And if you're an award like Purple Heart or something.
Exactly. So it's such a benefit that I really feel very strongly our veterans deserve, and we're always happy to talk about that and to get you to a lender that can go through the nuances. Now, you still must be approved for the loan. So from a
Absolutely.
financial perspective, you still have to have the income levels, the debt to
Income ratio.
the debt to income ratio, the standard things that you would need for a loan, but it is such a benefit to our members. And we really want to be sure that they take full advantage.
So if they cannot qualify, you can get, let's say, if they have the down payment, if there's a gift on the down payment, can you combine that with the VA loan? Like, for example, house is $1 million. I'm just throwing this out there. House is $1 million. I'm qualified for $500,000 loan because of my ratios. I have gift from dad, of a $500,000 gift. So can I use my VA benefit for that?
Absolutely.
Yes. I just wanted to hear. Like, I just want to post that questions because sometimes
Okay.
people are interested. Oh my God, it's 100% financing. So if I have down payment, I cannot use it. Like silly
Right.
questions like that.
Yeah.
So you can, absolutely. You can have a down payment.
So they make it easy.
They make it
Really
really
easy.
But don't they
easy.
make it assumable too?
Yeah, so that's a really good thing to talk about,
That's
Sharon.
my little hot button. Audience, that is my hot button.
So what do you mean when you say assumable?
So that VA loans and also FHA loans, they are assumable. So you might find almost all of them are assumable. And you might find a home that you really like and there is a VA loan on it, which has a good balance. Say we're talking $500,000 home and it has a $420,000 balance that is a VA loan. You would be able to chat with a lender who's familiar with assumptions on VA loans and try and qualify to assume that loan. There's a lot of nuances that go with it, but they're very simple nuances.
Do I have to be a veteran to assume a loan?
No, you do not need to be. That's
However,
good. That's very
yeah,
good.
but if that veteran needs to use their certificate eligibility for another house, then because that's the problem. Sometimes you say VA loan, and then the one who bought their house
Right.
used their eligibility. Now they want to move,
Yes.
and now they're gonna have a problem because they've used their eligibility. That happened to me.
Oh,
Okay.
Your
okay.
client.
My
I mean.
client. However, what's nice about that was that because their certificate of eligibility, that because they thought they didn't need to use their certificate of eligibility, which is good because it happened. He just didn't use their loan. So what happened was, and also when you do an upgrade purchase, what happened was that sometimes you have to wait until your certificate eligibility is there in order for you to close on the loan.
Right.
So if you're closing, let's say today, and then you want to close the loan on 2 days from now, sometimes it's not gonna be possible because
You need
because,
that
because it is an
eligibility.
assumption. So you need that certificate. of
So you really
eligibility.
do have to think about timing.
Yeah.
And there's timing from several different sides. So there's the timing in that when you're doing the assumption from the buyer side to get that eligibility through and to be approved to take over that loan takes longer than a
Yeah.
standard approval,
Right.
number one. And then on the other side, if the seller is then going to go and purchase something, there's a gap in time
Yeah.
while their eligibility is renewed. Well, the one is released
Yes,
from
from-
the private
exactly.
and goes to the other one.
And then that's a problem. That's an issue. But thank God, lo and behold, Navy Federal Credit Union. I don't know if we should do this, but one of the best friends of my daughter's best friend works there, and she's in the executive office, and I couldn't get anybody on the phone because my clients are closing on that other house, right? But they didn't have their certificate eligibility, so therefore they cannot close on the loan. So I was so caught. They were crying. They couldn't do anything. And then I said, let me see what I can do. So I called my friend inside. And then they had that. Navy Federal has this emergency department. I didn't know if you know that, for acceleration of
Great
and then-
info.
Yeah,
Yes.
and acceleration. And you
Insider
can-
tip for sure.
I like it. You can
We
call
have
me.
it now.
Yeah. And then there's like a team there that reports to the office of the president just to make sure that they're in line with whatever customer service. So they got it done in like a week.
Great.
Wow, that's great.
wonderful.
But I think an important thing is when you're speaking to and working through a transaction, when you're speaking to your agent and you're talking through the transaction, we really need to be aware of what that timing gap might be to avoid
Yeah.
it so that
Yeah.
we get it in
Exactly,
the
exactly.
future.
Absolutely.
But unfortunately, they didn't use an agent in the purchase. They just used me for the listing.
And that's why it's really important to have a professional agent and
Yeah.
also a professional lender who can walk you through the steps
Exactly.
while you're going through all these things.
Yeah.
Because these definitely are not the typical, the assumptions. But I think also,
agree.
I've known people who are, they're both military. The husband and the wife are military. And it's assumable loan. And they're fine with not having, having anybody come and take it because they still have the other spouse have the eligibility to use the VA for their next house. So, and then also some people who are retiring, they're going to take all the cash out of their house
Yeah.
and they're not going to get another mortgage,
Yes.
right? So I think the most important thing for people to understand is that you don't have to be a veteran to actually assume a VA loan.
That is a good
There's
idea.
different
Amazing.
circumstances that we've talked about, but you'll want to talk to a professional realtor to get more information, and we'd all be happy to talk to you.
I agree.
My question is, sometimes you can see this, oh, this is a really good deal, VA assumable for 2.25, but the gap is so high.
Yeah,
You know what I mean?
I-
Can you explain
yeah.
that? Yeah.
I think that's really important. So one of the things that we all do for marketing is to put in the remarks that there is a VA assumable loan at 3% or 2.75%, and that is really enticing and sexy.
That's fantastic.
So cute.
Right? So we get a lot of calls on those. And the biggest piece of information that we need to know is how much is actually left on that loan. So we're now, it's 2025. The interest rates have been higher since about 2023. So the homes with those very low rates now have increased in value, and our veterans have started paying down their loans. So what that means is they bought a house for $500,000. They funded the whole thing, so the original loan was $500,000. Now the house is worth $700,000, but the loan amount is $495,000. What that means is the only amount that the new buyer can assume is $495,000.
Yep.
So we have a gap of $205,000 that needs to be covered to purchase at $700,000. How do we do that? So now we've got this $205,000 gap.
Mom and Dad.
What do we do? Could be mom and dad. Maybe they do have down payment money that they were going to use on a conventional loan. So maybe it's there. Maybe they get a gift, or in some circumstances, you could try and get a second mortgage to cover that gap, or sort of almost like a home equity loan.
So like the bridge loan is sort of that, like that the second equity is like, how much is now the interest rate for the people, so they won't
So that
expect.
becomes the issue. The issue is that now you're going to have what we call a blended rate for the total mortgage amount.
Yeah.
So the bigger that gap and the more that you're putting into the second rate, and that second, because it's in the second position and therefore is more risky, that interest rate is higher than the current interest rate.
Do
So
you
not
know-
only, so you're not going from 3% to now we're at 6%, you're actually going to 8%.
8%.
So when you blend that rate, it might not make sense to actually assume the
So
loan.
below.
Yeah,
But in many
absolutely.
cases, it does.
Especially if you have a cash buyer. So if you have somebody who's
Well, cash
not a
buyer
veteran-
doesn't mean
Oh,
the
yeah.
Well, I don't
loan.
mean cash, but they have. I
They
mean
have
if,
the
they,
cash.
if
They
somebody
should break
has the
the gap.
cash to do the gap.
If you got the cash for the gap, you're
But-
golden.
But
Yes.
I have a question though. Have you encountered banks that do not want a second lien position?
Most do
Yes.
not.
So
it is a
they do not.
specialized loan
Yeah.
to do that second one. Now, we have access to a group of lenders that will do
Yeah.
that. And remember when we were talking in our group this morning,
Sure.
so we would have access to be able to do that.
So that's why you have to call us if they have a gap and then see.
So I think what we're saying really is that you might hear about assumable loans and it sounds really enticing.
And they are good.
And they are good, but there's a lot more information in the background that we need to give you details about. And every situation is going to be different. So we really need to have the time to talk to you, to find the specific house, and, to see what the situation is.
And it's so important that you cannot, when you say, let's say Chase or whatever major bank, assumable, and then those people will call the internet and call them directly. They're not going to speak to you directly. Okay, that's very important because they're only going to speak with the assumption if you have a ratified contract.
Oh,
That's
good
right.
to know. Good to know.
Yeah, absolutely.
I put a listing out there and the assumable information is there. And Christina, we cannot get it on the phone. We need authorization. So I got authorization. It's a lot of work because you have to authorize each person to talk because they wanted to know what are the terms of the assumable. I already told you. This is what the seller told me. You put a one pager. Of course, some purchasers are like, oh, I want to know more. You know what I mean? So it kind of complicates the situation. So as I said, unless you make an offer,
Right.
this is the interest rates, then the assumption process will start.
And
But-
don't we need like a good lender, a loan officer who will do it? Because when you call a lot of the loan officers, they don't want to do assumable loans.
Yes, no, because
And
the
it takes
assumable
longer.
loans are not their loans. This is going
Right.
to be charity
Right,
for them.
correct.
I think that that's an
Yeah.
important distinction.
Yeah, it takes
The loan
longer.
goes, when you assume a loan, you're assuming that particular
Particular loan.
loan with that particular lender.
Correct.
So when you're dealing with another lender, they can't help you
Right.
with that
Yeah.
particular loan. And many conventional lenders and VA lenders don't have access to that for that second piece.
Second piece.
Right.
So we really want to be talking about that ahead of time.
Yes.
And from the seller's side, the seller really wants to be dealing with a buyer who can purchase in the traditional manner because there are so many nuances that go along with a VA loan. And frankly, they need to be able to be qualified at today's interest rate for the total amount of the house. So that's what we're looking for when it comes in. And then yay to everyone if we can make that assumption work, and we've all made them work. But we really need to get into the nitty gritty. Very property specific and very buyer specific based on their financial profile and what they're willing to do.
But you need good professionals around you to make it happen.
100%.
As you can tell, it's very complicated.
It can be. And it does.
I mean, we're just talking about the loan portion, right? We're talking about the inspection and the appraisal.
Which you have to have an inspection for any VA product.
Well, it's not. You have to. And you're not wrong, but it's slightly different, right? A lot of people say, "Oh, I'm protected because the VA is going to require an inspection." Well, it's not really the inspection. It's that their appraisal, which is different, the value of the home. When they come to value the home, they are also looking for the home to be a safe place for that veteran
So
to
there's
live.
very specific, like, what is that called? Like, there was a new policy on the hot water heater needs to be a specific type. And yeah,
I haven't heard that one.
Yes, yeah, like those you cannot
Pressure
have,
relief valve?
Yeah, pressure relief. You cannot have, you have to have a certain
Like it's
copper
pounds.
or
Sure.
something like that.
Right.
So like in all the report, because I did like 3 last year, so it's all like you have to change. Oh, I already know that's part of their that's part of their policy. You know what I mean? Like they have very specific criteria for
Yeah.
appraisals to follow.
I think it's exactly like Bonnie said. They're trying to protect the veteran. They're making sure that the carpet is stretched right, that there are handrails. There are certain things that, you could have a home inspection, but the appraiser is going to be looking at those things.
Right, and there is a big difference between what a home inspection will bring out and what a VA
VA
appraisal
appraisal, yeah.
is going to bring out as an issue. There's overlap,
Yes,
but when it comes in the VA is going to require them to be fixed prior
before
to
closing.
Right.
Correct.
So what's a typical one you always see?
Your handrails.
Handrails. Yes, that's what I was going to say.
Yes.
The handrails, right?
If there are 3 or more steps, it
Yep.
must have
the
a handrail.
handrail,
Yes.
yeah.
Or
And-
curling shingles along,
Yeah.
the rake boards. That's
Yeah.
the other one.
So they're looking at safety issues, trip hazards. I had one where they had a sliding glass door that led to nowhere because they had never built the deck.
Oh.
And so they required them to put
To
up.
put I did too.
railing?
They put like a sort of like a those wooden
Yeah,
things.
Yeah,
yeah.
So that if you opened it, and for many new homes you see that
I've seen
anyway.
that.
Right.
They
In
don't
this
build a
ca-
deck, yeah.
right? It's smart. You need that.
Yeah.
I agree.
But they were not going to allow them to
Close.
purchase. Whereas in a conventional loan, just to step back for a second, there's very few things that
There's
they're going
no-
to deny from a property condition perspective.
Perspective. They don't care. Actually, it's not that they don't care unless like you have really
They're not
bad
as
roof.
Well, and also a
It's
VA
a lender
loan,
required repair. That's
but
what
the
I'm
VA
saying.
loan is backed by the federal government. And so, they're trying to look out for the veteran, and it's also backed by the federal government. So they do have these additional criteria that have to be met.
Yeah.
So that lender required repairs in your contract. Remember, we have that.
We do.
For
Clause, right.
the clause for FHA as well, which really protects.
And we never talked about VA appraisals.
Right. So I do, and I was gonna. I think that's a really good segue.
Okay.
Because I do think it's important that, again, when you're talking with an agent, either as a seller or as a buyer and you're considering VA loans, you have to have an agent that's very comfortable explaining the VA loan to the other side. So, for example, there is a misconception on that appraisal process that perhaps it's not as desirable as a conventional loan. But the reality is that they are 100% funded, they're 100% backed, and they are a very, very good benefit that our veterans should be allowed to take advantage of. So if you have someone who is comfortable that can go out to the marketplace from the seller side and offer understanding the terms, the assumption, that puts the seller in a nice position in terms of being competitive when they're selling their home. And as a buyer, when you're looking into using your VA loan, not even as an assumption, but if you're a buyer using your VA loan, you want an agent who goes out and says, my buyer is qualified for this loan in the same way as a conventional loan. They are going to fund in the same way. They can close as quickly, and they're going to be as competitive as any other type of funding vehicle that you'd use for purchase.
I don't veer away from VA loans because, in my whole history of experience of real estate, I never had a VA loan fall through. Honest to
Nor have
God.
I. But even in competitive times back in 2020, 21, if you had a VA loan,
You cannot compete.
you can't compete.
Yeah. But the thing is, like, it's just so weird because, like, when I see a VA loan, I'm actually want to take it because
Me too.
like it's like I don't think
too.
there would be an issue on this. Like there might be nuances on let's say on appraisal because sometimes they might choose an appraisal that's not from the area and kind of messes up the appraisal. But there's an appeal process, and before it goes there, then you have an opportunity. The lender will give you an opportunity to
Well, how
actually.
did the stigma start that nobody really wanted, not nobody, but VA loans
Because
were
it's
negative?
100% financing, so people said, "Oh, you don't have proof of funds." I mean, it's more like because there's no risk. So it's like, "Oh, my earnest money deposit is 50,000 for a VA because it's zero down payment. They don't have any down payment, so it's like
Right.
5,000 earnest money versus 50,000. So it's kind of like I think the stigma was from there. But Sharon or Vonnie, you tell me, what do you think? Where did the stigma start?
I agree with you. I think that's how it started because there was basically no skin in the game, and
That's
they
true.
could walk away. But I think also was that when we were just talking about were the repairs because who's going to take care of the repairs on a VA loan when you're in a competitive situation?
Yeah, and then it's an as is, like I don't want to repair that.
Yes.
So before,
greed.
Yeah.
oh, maybe greed, yeah.
Yes.
That's the bottom line.
So you take over, like there's some repairs. I'm not gonna do anything, but it's a VA loan. Well, you have to do it, and sometimes we as agents come in, we just have our our contractor do it so it can close. You know what I mean? Like do.
Sure.
Well, and I do think that it's my perception, the VA tries to work with us. They really do. And there is an appeals process if something doesn't appraise.
Right.
And I do think that there was the perception that years ago that they were bringing in appraisers that were unfamiliar with the Washington metropolitan market, which is a higher priced market. Even if you go out 2 or 3 hours from the Washington metropolitan area, and so they were unfamiliar with it. I think now there's been so many things that have changed. For example, the ability to find comps online and to understand the micro markets in a Washington metropolitan area.
And not only that, the lenders themselves, they understand it better, and so they have a series of appraisers. They don't really just like pick. They don't have a favorite. Of course, they cannot talk to the straight to loan officers, but they have a series of reputable appraisers that understand our local market. So I think there's less of that appraisal issues than like 3 years ago, I guess.
I totally agree with
Well,
that.
and the other piece is that on any other type of loan, you get your appraisal back and you have no recourse. Actually, with the VA, you have 2 levels of recourse to try and have an appeal. So the first one being you get, I guess it started in Tidewater, Virginia, I have no idea, but it's called a Tidewater. Before we even get the appraisal, we get notification
That there
if
might
it's
be
going
an
to be
issue.
low. If it's going to be low, we get notification. And then we have the right as agents, lenders, we have the right to respond with our own set of circumstances, our own comps, those kinds
Yeah.
of things, to back up the value, to try and get them to reconsider before we ever see it. And the appraiser, when they give us their appraiser, must address what we sent and why they included or excluded the information that we gave to them. So that's the first level. After that, you can go directly to the VA and ask for a reconsideration of value.
So who does that, the seller or the buyer?
So the seller is the one that is supposed
The
to
listing agent is
be the one to initiate, and the lender is and the buyer are the ones to initiate. Well, I should say the VA member is the one who's going to initiate that and ask for the reconsideration of value. But the reality is, this is where having your team is important, right?
I
So
agree.
I'm working with the listing agent to try and get information. The lender is involved. There's a specific form that has to go back in the way that we're doing it. When we're all working together, we're going to try and have the best outcome, which is really what we want, which is the seller wants to sell, the buyer wants to buy. We've agreed on a value, so however we can get it there, that's what we're doing. But those types of opportunities to actually have not one, but two opportunities to go back and have that approved is really good.
Yeah.
You know, that's something that other appraisals, and it used to be, it still is the case now, that the VA, the issue was that the VA loan stays with the property afterwards, and it was available if somebody else came to try and buy with the VA loan, that would sit there on the property. That was the valuation for
That's
the property
amazing.
for 6 months.
Wow.
Now, though,
Amazing.
that's still the case, but but now, even on a conventional loan, if you do an appraisal, that is now available to all other appraisers coming in, all
Yeah.
other lenders.
But it sticks to the value. So, like for example, if the value is very low and then you did the renovation, they stick that value to that. So I think that's good, and
Good and bad.
Yeah, and again, I think that the overriding message is there's so much that goes into your property specific, your buyer specific, your seller specific circumstance, that working with a really good agent and a really good lending team, and we haven't even gotten into title.
I was going to
You
say
know.
title, yeah.
that having that package
Yes.
supporting your purchase or supporting your sale
Absolutely.
really does
Absolutely.
become important.
So quickly, what if like it didn't appraise and then the loan fell through? Let's say nobody agreed on the appraisal, because some sellers are like, they have unrealistic expectations. Let's face it, sometimes seller have
It does.
unrealistic expectations in their house. So let's say the loan falls through because nobody agreed on the price. So with that value, stays within the property for 6 months. So what if my seller wants a higher value?
So there's a couple things in there. So let's talk about what happens. Let's go back
Yeah.
one step and say, okay, we did all of that and the value still came back low.
Yeah.
What happens?
Yeah.
Well, the VA says that the veteran has the right to negotiate the price down. The seller has the right to say no.
Yes.
They can agree to split it.
Yes.
The buyer
Which
can
we
agree
do.
to pay it. You know, all of those things, any of those things can happen. What's different is the VA gives that an absolute right to negotiate that appraised
Yes.
value and to walk away if they don't come to an
Yeah,
agreement.
exactly.
So-
the same as convention, the same as a normal loan, right? I mean,
Yeah.
you can
So
negotiate. the value.
officially on a conventional loan, you can waive that right. On a VA loan, you cannot
waive that right,
It's
yeah.
always, even if
Can't.
you always have the right to. Now, you can waive financing completely.
Right.
And then it doesn't come into play anyway, but you can't waive that, you
Yeah.
can't waive that right within the financing contingency of the VA loan. That's a big factor. So, but let's say we could not come to an agreement, because
Yeah.
here's what's gonna happen. We get in the VA appraisal. It's low by $15,000. What's our choice? We walk away.
Right.
Number one, we say no. Number two is we say, hey, drop
Split
the
it.
price $15,000 and we'll continue with the loan. We say, hey, I'll split it or whatever value we want to do or something in there
Yeah.
that happens.
Yeah.
If it then goes away, the seller knows that if another VA contract comes in, that appraisal is going to stay with them. They're not going to get another one. Whereas traditionally, if it was a conventional loan, you can, let's call it appraisal shop. So you can go out and try and get another appraiser to come back in, reevaluate it, and they may have a different opinion.
So the only way for them to really get away for a higher price is to get a conventional loan.
That's right.
Yeah.
No VA loan.
Yeah.
Interesting.
Or wait 6
Yeah.
months.
Wait
7
or
months.
wait 7 months.
And the market changed.
Okay. Okay, so let's close up with what our big takeaways are when you're talking about a VA loan.
Okay.
So,
Well, my takeaway. So it is a good loan. It's 100% financing, no PMI, really good benefits. I believe I need to marry a veteran.
well,
Eligible.
Erica did that. She
No, but kidding aside, I think like my major takeaway is that yes, don't be scared of the VA loan. Agents out there or other people, please consider VA loans. They're good. Again, they're worried because it has an appraisal contingency, no money down, 100% financing. So, it's like, why? I'm not gonna accept this VA loan compared to a conventional loan. But seriously, in my whole experience, I've never had a VA loan fall through.
What about you, Erica? What do you think?
I think the VA loan is an excellent financing vehicle, but if you don't have the right team of professionals around you that can help you navigate the space, you can get lost very quickly. So it's important to, get people who understand
Good point.
VA loans, get a lender that really works on VA loans, so you can be very happy and knowledgeable and everybody's communicating to where you feel secure and getting, because as this last hour has proven, there is a lot of detail and nuance
And we didn't even get into, you and I had a lot of conversations
Yes.
when you were going through the process because they had a newer agent because they didn't.
this is not my fault. Not my fault.
And there was a lot of misunderstanding
Yeah.
and in that process. I mean, she has a real example of that.
Yeah.
So
Nice.
it is really, I think that's a really
experience.
That's a
important.
good
Right.
takeaway.
Oh,
A
yes.
good team.
Super good
Yeah.
takeaway.
Oh, yes.
Yeah.
And
Sure.
I was gonna echo that is the team, and I do feel like I and some of my clients even know this about me. I am very passionate that our service people deserve this as a benefit, and that as a real estate agent, I'm so honored to work with these people who have sacrificed for us or have been willing to sacrifice for
agree.
us. I want 100%. This is a deserved benefit, and I am thrilled to work with any veterans and so proud.
I agree.
Well, my takeaway is, first of all, I'm a realtor, but I'm actually a military spouse with a person who served for 30 years.
Yay!
Thank you. But really what's so important is that this is such a great benefit for all veterans and people who've separated as well, retirees. It's just a wonderful benefit, and really just talk to your professional agent. We have lenders who can help walk you through it. We'll be there every step of the way.
My takeaway is that this is an amazing loan. As Deborah said, it's federally funded. Someone is actually looking out for you. You don't have to worry. You find the right professionals. It's going to be easy peasy. You deserve it as a vet, as a reservist. You deserve it. Do it.
Today is brought to you partially by our favorite lender, Brian Lovern from Cross Country Mortgage. He is a top 1% lender in the Washington metropolitan area with a specialty in all types of loans, but is my go-to guy for any questions that you have regarding VA loans or any other type of loan that you might have questions for.
Yeah, he's my go-to guy he does all the financing for all of my clients.
Yeah.
Great.